Alright folks, you already know we're talking about AT&T stock today. Why? They just reported earnings pre-market. Great stuff. So far the stock's sitting up 1% pre-market. Nothing crazy, but always a stock to look at given recent news about this stock and really overall terrible performance that it's seen. You look over the last 5 years, the stock's down 30.89%. Not an ideal situation. And you really can pinpoint the exact moment. Let's be clear here. They didn't recover from their March of 2020 dip, which every other stock pretty well did. I'm just saying. And then you can kind of pinpoint the moment earlier this year in which they decided to go with their spin-off company idea. Let's just say investors have not been happy since then, down an additional 20% since that point as well. So, a lot to talk about with this, but let's take a look at these earnings. Let's talk about the task at hand here. Non-GAAP EPS of 87 cents beats by 8 cents, and a GAAP EPS of 82 cents beats by 21 cents. Actually nice in terms of profitability beat for several reasons. Obviously, it's very important to them as far as the dividend's concerned to hit that GAAP EPS line. Now, the issue with that is being that they will be cutting the dividend within probably the next quarter, I presume, or they might wait until Q1 of next year. I'm not sure, but they will be cutting the dividend in half. They've said so. We'll see exactly what that looks like for them. Very curious to see. The revenue line coming in at $39.9 billion, down 5.7% year over year. It's a miss by $250 million. Again, that's a concerning line here, and you see why the stock's down. Not only a miss, but to see a down 5.7% line, mid-single digit down is just not good. You don't want to see down at all, really, in a company you're investing in. Certainly one once the dividends officially cut, and I believe it's going to be cut. I believe I will be selling out of my stake. Still at a loss, though, is the issue, because of the fact that this stock is kind of a terrible stock. Terrible garbage. Let's be clear with each other. Adjusted EBITDA coming in at $13 billion versus a consensus of 12.97. Free cash flow at 5.2 compared to 6.49. I don't know where they're missing on the free cash flow standpoint there, but not too bad. Capital expenditures 4.7. Not crazy. As far as the mobility segment, their phone segment, 928,000 postpaid phone net adds. Net what postpaid? Okay, and then 1,200. We're struggling here. 1.28 mil or 1.218. Look, we got a tough time here. 1,218,000 phones, postpaid net adds, and prepaid, 249,000 prepaid phone net adds as well. I don't know who's using these prepaid phones. I'm under the impression it's only drug dealers. Let's be clear with each other. Look, these are burner phones. HBO and HBO Max total subscribers totaled 69.4 million. Again, not as incredibly relevant for them due to this upcoming spin-off where they're not really going to reap the benefits even of HBO Max. So that is where you get a big concern on that, because that is really their growth factor here. The only thing that could be great for them is HBO Max. Now they're going to be strictly a mobility company, and obviously concerns come along with that. They expect to reach higher end of the reach the higher end of the end of the year HBO Max and HBO global subscriber target of 70 to 73 million. Now they're expecting full year EPS to be at a high end to the low to mid single digit range, and is on track with the free cash flow target of 26 billion, which is great for them in terms of dividend, but if they cut it, it's not great for them. Looking at the press release here, anything great? Not crazy. Obviously, we talked about all these data points, which we love to see. Obviously, great improvement year over year in terms of EPS line, but still, a lot of concerns here. We saw the mobility segment revenue up 7% in the mobility segment, and services up 4.6%. Equipment revenue up 15%. That's good to see, actually. That's pretty nice to see. Selling more phones is fantastic. And obviously that's a good sign for companies like Apple, that they're performing well, Operating income coming in at $6 billion is up 4.6% year over year. Nice to see. Nice to see. As far as wireline, 289,000 fiber ads, which is great. Penetration about 37%. So there's a lot of room to grow with AT&T fiber. Could be great for them in the future. Revenue up 3.4%. Nice to see. As far as the Warner Media segment, you see total subscribers were up 12.5 million year over year. And domestic subscribers were up 7.1 million in the past year. Domestic average revenue per user coming in at 11.82, nice for them, and total revenue is up 14.2%. Direct-to-consumer subscriptions revenue up 25%. Good to see on that aspect. Really good to see. I like to see it. Nothing crazy here, all things considered. Through it's a lot of nonsense, repeated nonsense, as far as communications. Nice, good stuff. Again, talking about revenues of 3.8%. Thanks to mobility. Mobility doing great. Mobility. It's really the future of the company, so it's good that it's doing great. But again, I'm concerned about the revenue line to an extent. We already know about this. We've seen this. Okay, postpaid phone average revenue per user at $54. Nice. But it is down slightly year over year due to promotional discount amortization. I get that. Business wireline revenues down 5.2. Now that could be certainly a concern. You'd like to see that be a number that grows. You really would. Definitely a segment that's pretty significant for them, as you see. Mobility segment was 19 million, but this is $5 billion, nearly $6 billion that they could add to that line there, which would be massive for them. Really massive for them. Consumer wireline, which obviously business wireline will be big for them because you want to sell your internet service to businesses. Consumer wireline though was up, and that's good too. Very good to see in that aspect. We saw the Warner Media operations too. With the spinoff, not as relevant to them in the future, but that's okay. Latin American operation highlights. Nothing crazy. Nothing crazy. I do want to look at the balance sheet because this is a company that's historically struggled with a balance sheet, and we will take a peek and see if I can find these things. Look, I thought they were going to be on there, but it turns out they weren't. So now I got to go all the way over here to quarter 3, and look at this. Look at this. Look at all the effort I go through here. I go through a lot of effort just to get you a balance sheet, and I hope you appreciate it, folks. Freak. Total current assets here. They're giving a 9 months comparison, not bad. $57.2 billion compared to 52. Big growth in the cash position. I'm curious why that might be. What they're looking to maybe acquire, I don't know, because this is a company that's trying to get rid of their productive assets. So hard to say. Total assets in general at $547 billion compared to 525. Typically a company with a lot of debt, but we'll take a peek at it. Total current liabilities at 81.6 compared to 63. So it looks like they definitely, to get this cash, they acquired quite a bit of short-term debt here. Debt maturing within a year, as you can see. So long-term debt, it's up there. $155 billion long-term debt. Didn't really increase all that much this quarter, just really the total current liability. So I'm not too shook by this. Total stockholder equity at $181 billion compared to $179. So technically they did improve in the last 9 months, which is actually not too bad. Now my concern is long-term for this stock, where it belongs. It's trading cheap, I'll give you that. Revenue this year likely somewhere around the 160 to 170 billion dollar mark. If they're lucky, they might not hit that. Trading a market cap of 185 is trading cheap, and the dividend yield currently is 8%, but that obviously will be changing as we go along. Now, as the stock falls, the dividend yield obviously rises. Even if they cut it, we're still talking about an over 4% yield, which is decent, but not that decent if you're talking about a company that's completely wasting the assets that they have towards them with this spin-off nonsense. So I'd like to see improvements in the business. Wireline segment, obviously, as we go to the future. I just don't know how this stock trades necessarily once they go through with everything. We'll see. I hope you have a great freaking day, though. I'm not buying AT&T at this level.